Hey everyone, welcome back to the show. So today we're diving into something pretty wild. Gold has just crossed $4,000 per ounce for the first time ever.
Yeah, that's huge. It's a historic milestone, and it really says a lot about what's going on in the global economy right now.
Right, and people are kind of wondering why now, right? Like what's pushing gold to record levels after all these years of just hovering way lower?
Well, there's this mix of things happening at once. We've got global uncertainty, talk of interest rate cuts, and a lot of people looking for safe havens. Gold just happens to sit at the center of all that.
Safe haven meaning like investors running to it when things get shaky.
Exactly. Every time there's geopolitical tension or economic risk, gold tends to shine. And right now, tensions are high in Eastern Europe, the Middle East, and there are worries about US debt levels too.
So it's like a storm of fear and uncertainty, and gold's the umbrella everyone's grabbing.
That's a good way to put it. Gold doesn't pay interest, but it holds value when paper currencies or stock markets feel risky. Investors see it as a store of value, something real and dependable.
But wait, if it doesn't pay interest, why would people still pile into it? Isn't it better to like hold bonds or stocks for returns?
Normally, yes, but the key here is interest rates. When central banks, especially the US Federal Reserve, start cutting rates, the opportunity cost of holding gold drops. You're not missing out on much yield, so gold becomes more attractive.
Ah, so that's the rate cut angle. Lower rates make gold look better in comparison, right?
Exactly. Plus, lower real yields, which are interest rates adjusted for inflation, make gold shine even more. And right now, markets are betting big that the Fed will ease policy soon.
And the dollar's part of this too, right? I read somewhere that a weaker dollar helps gold?
Yes, totally. The dollar has softened a lot lately, and that makes gold cheaper for foreign buyers. So you get more global demand. And some investors worry the US might be overprinting or running too much debt, so they're moving away from dollar assets.
So it's not just individuals buying gold bars, it's like big institutions too.
Oh yeah, central banks have been buying tons of gold, especially in emerging markets. They're diversifying away from US assets, and you've got huge inflows into gold-backed ETFs as well, so institutional money is fueling the rally.
That's interesting. So it's not just fear driven, it's kind of strategic too.
Right, central banks don't act on impulse. They're thinking long-term, building resilience in case of currency shifts or geopolitical risks. That adds a lot of support to gold prices.
Okay, but I also saw people saying it's a technical breakout. What's that about?
So that's more about market psychology. Once gold broke through its old highs, momentum traders jumped in. It triggered automatic buy signals for a lot of algorithms and funds. People hate missing out, so they join in and prices climb even faster.
So, like a snowball effect, one big move sets off more buying.
Exactly. And the thing is, gold's already up over 50% this year. That's huge. Both fundamentals and market psychology are pushing it higher.
Wow, 50%, that's crazy. But, isn't there a risk it's overbought now?
That's a fair concern. Some analysts do think it might cool off a bit. If interest rates rebound, or if the dollar strengthens, we could see a correction. And if geopolitical tensions ease, demand for safety might fade,
So it's not like a own way street. There are definitely risks to the rally.
for sure. Another factor is profit taking. After such a big run, traders might start cashing out. That can bring prices down in the short term.
Right, and if stocks suddenly get strong again, that might pull money away from gold too.
Exactly. Investors are constantly balancing between risk and reward. If risk appetite comes back, gold could lose some shine.
But still, crossing 4,000 feels symbolic, doesn't it? Like a psychological milestone for global markets.
Absolutely. It's more than just a number. It reflects a shift in how investors view the world. We're in this new phase where safe havens are hot again, yields are dropping, and people are questioning the stability of traditional assets.
It kind of feels like a new chapter in global finance. Like gold's old school, but suddenly it's the cool kid again.
Haha, yeah, you could say that. It's timeless, really. When everything else feels uncertain, people go back to what's tangible. You can't default on gold.
That's true. So what's next? Do analysts think it can go even higher?
Opinions are split. Some think it'll consolidate around these levels for a while. Others see potential for 4,500 or even 5,000 if rate cuts come faster or if global risks stay elevated.
So basically, if the world stays messy, gold keeps winning.
Pretty much, the more uncertainty, the more people look for something solid. And that's gold's core appeal.
All right, so to wrap it up, gold's record run comes down to fear, policy shifts, a weaker dollar, and a bit of FOMO from traders.
Exactly. It's this perfect storm of economics and emotion. And even if it cools off, the 4,000 mark will go down as a major turning point.
That's a great note to end on. Thanks for breaking it all down. Really clear stuff.
Anytime, always fun to talk markets.
All right, that's all for today. Thanks for tuning in, and we'll catch you in the next one.
Psyching Paws, always so toast.